Good morning. It is option expiration day, and we're going to look at the position I set up last week on Invesco QQQ and make a decision about whether to do something or do nothing with it.
To be notified when I post a trade update, be sure to like and subscribe to this channel.
You might remember that about 8 days ago, I bought 5 shares of QQQ and paid $453.88 per share. The current price is $456.10. I last Friday, 7 days ago, set up a cash secured put with a strike price of $447.50. I received $204 for it, and right now the position is worth $2.50. That's the amount that I will need to pay to close it if I want to close before it expires at the end of the day today. So I'm going to look at some of my possible roles. I'm going to click here on the position, and let's start by looking briefly at the chart. So this is the 1-year chart. You can see about a year ago it was trading at 361. Right now it's at 455. It hit a high in March and then pulled back to about 414, and now it's up at 455. And if I go down here, I like using this RSI, the Relative Strength Index, is a nice little indicator that lets me know when the price is likely to pull back. If it hits up here, at the 70 range, then there is likely to be a price decline coming. I don't know how much it's going to decline, but I can tell that it's trading pretty high and there's likely to be a pullback. When it's down here at about 30, you can tell the price is going to almost always turn around and things will start climbing again. The RSI is a really good indicator for healthy companies, and it's just a nice guideline. So I'm thinking the price is likely to pull back. So I go in thinking about that, and now I'm going to look at the options chain. So if you recall last week, we looked at and considered strike prices of 450, 445, and settled on 447.50. Since I think the price is likely to decline, and I would not mind owning 100 more shares, I want to keep a strike price at which I would not object to being assigned to buy these shares. So if I roll it out to 447.50, that's a straight roll. I'll pay $2 or $3 to close it. There's an offer to pay me $78, $79 to sell a new put with the same strike price. If I increase the strike price a little bit, maybe to 448 or 449, I can get a little more income. These are pretty low premiums for this trade, but it's just a 1-week trade, and it buys me time to see what the share price is going to do for the next month. So I think I'm going to increase the strike price to 83. I'm going to go over here and just do a quick calculation. If I increase the share price to, not the share price, the strike price to 448, I'll require $44,800 to secure it, and it looked like I could get about $85 in premium. And if the position is open from May 24th to May 31st, that's a 9.89% annualized return. It's not a great return, but it does keep my strike price lower. And since this is just 1 week, I think I'm going to go for a fairly conservative roll. And so let's go back and place the order. So I'm going to click on the current open position and click roll. And this is the order to close the existing position. The new position would expire in 7 days. I'm going to make the strike price 448. There's a bid of $76, so the ask is at $78. I'm going to see if I can get filled at $77. I'll also pay $1.32 in trading fees if this executes. So I'm waiting to see. There it goes. All right, so it filled at 78. Now I'll go back to my spreadsheet. So it actually, so 76.78 is the actual amount that's coming into my account, which is only an 8.94% annualized return, but this is just for a week, and I hope that I'll be able to do a little better next week. The current share price, $455.70. And this is the share price for the closing of the last order. I turn them fuchsia just to know what's open and what's closed. This line is going to be green, so I know it's my current open trade. And it was QQQ, roll the put to 448, and it expires on 5/31. I go ahead and put that in the notes because sometimes if I adjust early, I want to know what my original plan was. I'm going to come over here and my instructions are going to be to see what the share price does this week. Then I'm expecting it to pull back. And probably straight roll next week for higher premium. So those are my instructions to myself. I'm going to, oops, I put that in the wrong place. I keep a notes column, so that should have gone here. And now I'll check my net liquidating value for the entire position right now. It's $21.98. My total expense and income. Spent this for 5 shares and then sold a put, sold another put. And I can check out my adjusted cost per share, that divided by 5 shares. So I've brought my average price per share down, and I'm actually going to add one more column here. And I'm going to call this profit loss. So if I wanted to close out this position today, it would cost me, I could receive $21.98, but I have paid $19.89. So right now, overall, in this position I've had open a little over a week, I am up $208.72. But remember, this is unrealized gain because I haven't closed out the position yet. All right, see you next week, and we'll continue working this trade.
If you're trading along with me in a real or simulated account, drop a comment and let me know what strike price and expiration date you chose. Then come back later and share the outcome of your trade.